The spring home buying season is starting to heat up and there is plenty of home buyer demand out there. However, there is not a ton of listings that are currently hitting the market. So I'm going to show you a couple charts here with regards to what's happening in my local market. And from what I could tell, many markets across the country are experiencing these same type of conditions. So we're going to talk through what's going on in the market, some of those nuances, and what's going on with mortgage rates, which might be leading the charge in some of these trends that we're starting to see unfold. Now, up on the screen is a chart indicating the number of homes for sale, sold, and pended. This light green bar is going to be the number of homes listed for sale. So currently we have just under 1,700 units that are listed for sale. This is actually our housing inventory, and this is going to be down about 38% year on year. Last year, we started to see this huge spike in inventory going into the summer months. This increase in home inventory that we saw last year was bringing us into a more balanced market where we had maybe 3 to 4 months worth of inventory at the peak. Now we are still sitting at about 1.3 months of inventory, which is historically very low, especially this time of year. This red line is the number of homes put under contract. That's about 1,650 units currently under contract. And keep in mind, this is going to be for all single-family homes in Sacramento, Placer, and El Dorado County. The number of homes put under contract is down about 44% year on year. So we are seeing less transactions take place. That is to be expected with the rise in interest rates and the lack of inventory that we are seeing come online right now. But you can see that from the beginning of the year, which is typical, we start to see this seasonal trend where you start to see more listings hit the market and you start to see more properties go under contract. And you can see this is a nice gradual line. I expect that that will continue into the summer months. Generally, it peaks out in July. The difference this year is that we're not seeing a ton of housing inventory come online. Usually we see a seasonal spike, typically ends in July, and then as we go into the winter months, you see less inventory. So this will be something that we need to pay very close attention to as we come into the end of summer and as we're going into the winter months to see what happens with the housing inventory at that time. Number of housing units sold, that's this dark green bar right here. We have about 1,281 units that had sold in the month of April. Since the number of homes under contract is going up, I expect this number to raise into May and June as well. This next chart is going to be the average price per square foot. Currently, we're sitting at $333, whereas the same time last year, we were at about $360. So we're down slightly year on year with regards to pricing. But if you take a look at the beginning of the year, we've started to see the price per square foot trend back up. Now, this is common. We generally see prices kind of roll over as we go into the winter months and they start picking back up in the spring. But this is a very good indication here that despite the increase in interest rates, there is still home buyer demand. This next chart is really interesting because again, it speaks to the buyer demand that we're seeing in the marketplace. It's actually stating that the average time on market or the average days on market to sell a property is starting to go back down. Currently, we're sitting at about 41 days on market. That's the average time it takes to sell a home. And this is actually slightly bifurcated because many of the homes that are under the median home price right now, at least in this local market, if they're priced correctly in a desirable location, a lot of times they're selling in under 2 weeks, sometimes with multiple offers. While if they are over the median home price and they are not priced correctly, at least based on what other homes of similar size and amenities are selling for or have sold for, they are sitting on the market a little bit longer. And this red line here is the indication of the actual sales price versus the original list price. So at the time of this recording, homes are on average selling for about 98% of the original list price. And in many cases, they are still providing seller concessions to get those deals across the board. And that of course is going to be situational. So if you are a potential home buyer or home seller in this market, make sure that you speak to an experienced real estate agent that is pricing the home correctly and structuring your offer for success. Now, to sort of drive that point home about the market being slightly bifurcated here, this chart shows the average sales price versus the average listing price, or the average price that's sold. So over in this local market, again, Sacramento, Placer, and El Dorado County, the average listing price is $934,000, while the average sold price is $654,000. So that's nearly a $300,000 gap between those averages. And that's kind of what I was talking about different segments in the market. So homes that are priced under that median home price, they are selling faster and obviously at a higher volume, while the homes that are higher priced are going to be sitting on the market longer. And in general, it takes longer to move that caliber of a property in today's market. This final chart is the month's worth of inventory. We are currently sitting at 1.3 months. That's the available amount of housing supply. And if nothing else hits the market, it'll only take 1.3 months to deplete everything that's listed for sale. And you can see that this is down pretty significantly from what we saw just 6 months ago. In our local market, homebuyer demand is still far exceeding the levels of supply or housing inventory that we have available. But one of the main headwinds that we are still facing today is affordability. And a lot of that still has to do with the volatility that we are seeing in the mortgage market. At the time of this recording, the average 30-year fix is hovering at 6.57% for a conventional loan, and with the government products, FHA coming in at 6.18 and VA coming in for our veterans coming in at 6.19%. Now, these mortgage rates have fallen from the peak that we saw just a couple short months ago. And on a positive note, we are starting to see CPI or inflation starting to come back down. As inflation comes down, generally speaking, mortgage rates tend to follow. So we'll have to continue to follow that trend. It's quite possible by the end of the year, we might be closer to like a high 5% interest rate on a 30-year fix, or even in the very low 6% range. So we'll continue to monitor it, but that's what's taking place in our local market. Would love to hear from you. Leave a comment below. Let me know what you are seeing in your local market. And for more videos just like this, be sure to like and subscribe, and we'll see you on the next video. Take care.